Ruchi, we'll leave it at that. In fact, on that note, let me also welcome on board Gopal Balachandran, the CFO and Chief Risk Officer at ICICI Lombard General Insurance. Gopal, hi, good morning. Good to have you on the show. It's been a relatively good quarter for you in terms of the profit growth of about almost 23% in a pandemic year, that too. What's led to this strong profit? And although the combined ratio has actually increased to 101%, as I understand, it's been a bit resilient in a pandemic year.
I think if you look at it from an ICICI Lombard standpoint, not just this quarter, in general, if you look at the approach that we have been taking for writing risk, has been profitable growth as an underlying theme. And it's the same approach that we have continued even when you look at this particular quarter. And the point that you said that this has been in that sense a difficult year, given that all of us has been exposed to the pandemic. Even despite that, if you look at, I think so far as customer preferences are concerned, clearly the placement of insurances of customers are with companies which have got relatively better balance sheet, solvency position, and the underlying, I would say, key performance matrices. And on each of those parameters, if you would have seen for this particular quarter that's gone by, from a top line standpoint, I think we were able to get to a reasonable growth of almost about 9 to 10% thereabout, contributed by across lines of businesses, and whether it is commercial lines, whether it is motor, and even to that extent, even the health line of business. And the fact that I said that from an approach standpoint, we have always looked at underwriting the risk from a profitable growth theme. Even insofar as the bottom line is concerned, I think we were able to be reasonably comfortable. So when you look at not just the quarter, generally we avoid talking to the in terms of so far as quarterly performances are concerned. If you look at on an year to date, which is for the full year gone by, from a combined ratio standpoint, you are right. I think we were kind of slightly less than about 100%. That's what we have largely spoken about in terms of the targeted combined ratio. And even in terms of, I would say, the profit after tax growth, it's been quite reasonable. And the solvency is quite comfortable at about 2.9 times as at the end of the year. And even ROE, the return on equity for us, has been quite robust at about 21.7% for the full year.
Right. Gopal, you just talked about the combined ratio, and we've seen a rise as well for you in particular. Share with us some more color on how the claims ratio has been so far, given the pandemic year, and how has the customer behavior as well panned out?
Sure. I think, again, that's a very valid question to ask. I think let's look at what's the year gone by. While we have been talking about this, when you looked at the first wave, what did we see was clearly an increase in claims so far as COVID cases are concerned, understandably so. But at the same time, when you looked at across lines of businesses, some of the claim incidences were significantly lower. For example, on motor, clearly because of the first wave where there was a severe lockdown that happened in the country as a whole, we did see a reduction in claim incidences because the number of vehicles that were plying on the road were far lower. Even if you look at on the health side, while the COVID cases saw a significant surge, the non-COVID health claims were clearly one had seen a decline. Again, understandably so, because customers were apprehensive to go to a hospital to get himself or herself treated. But having said that, I think from an ICICI Lombard standpoint, we always wanted to follow the path of prudence. And even in those times, in the initial couple of quarters when the claim incidences were relatively lower than what you would have seen in a business as usual scenario, we continued with our approach to providing for loss reserves. And to that extent, we carried those loss estimates, keeping in mind the fact that in the subsequent quarters, there is likely to be an increase in claim incidence as and when the economic activities will start to open up. And pretty much on expected lines, when you looked at Q3 and maybe early Q4, we did see resurgence of activities happening in the country as a whole. And hence the approach to prudence when it came to loss reserve estimates came in significantly handy.
So while you do have strong capital ratios, would you have to allocate more reserves towards the loss reserves? And what kind of a gross direct premium income growth are you expecting for ICICI Lombard vis-a-vis the rest of the industry?
If you look at the year gone by, industry grew at about 5.2%. We ended the year with almost growth in line with the industry. But within segments, I think there have been lines of businesses where we have significantly had accretion of market share. When you look at for FY22, as I said, at this point of time, obviously there is a lot of uncertainties that is there. But having said that, I think what we expect is from an industry standpoint, given the base effect, the industry should go in their early teens, between a 12 to 15% range thereabout. And from an ICICI Lombard standpoint, our approach has been that if the market remains sensible, we would want to see on the preferred segment exhibiting growth which is higher than the market growth rate. So that's a stated objective from a growth standpoint. To your first point on loss reserves, as I mentioned earlier, our approach to reserving has always been following the path of prudence. And to that extent, that's reflective of the loss triangles that we disclose as a part of our annual report or even as a part of our results presentation. As you can see from the loss reserve triangle, which gives information for 10 years, almost 9 out of 10 years, we have actually seen a small amount of reserve releases, which indicates the level of prudence that we maintain when it comes to estimation of loss reserves. And hence, to that extent, we believe we are reasonably reserved insofar as claim incidences are concerned.
Now, given that ICICI Lombard is present across segments, motor, health, and fire, insurance, etc., are you seeing any signs of normalization in any of the segments that you're currently present in? And which segments do you see gaining market share? And what is the competitive intensity looking like in each of these?
So let me kind of talk in the context of what ICICI Lombard is focusing on. So for example, when you look at the commercial lines, as I said, the preference of customers is on quality companies. And given the balance sheet strength and the solvency position and the underwriting matrices that we have been able to achieve, we are clearly seeing a shift in market share happening for us. And that's something that we believe will kind of sustain even as we get into FY22. So that's one. On the motor side of business, what we are clearly seeing is obviously, given that there have been low loss incidences for the industry, there is relatively heightened levels of competitive intensity in the market. Now, the expectation is that one would expect these things to continue for some more time. But the only factor is, if you look at the overall industry combined ratios, particularly for the Q3 that's gone by, Q4 numbers are yet to be out for the overall industry. Q3 industry combined is still at about 119%, which is significantly adverse when you look at relative to ICICI Lombard's combined of closer to 100%. So hence, the competitive intensity will last for some time, but our expectation is that maybe somewhere through the year, we should expect normalization to happen on the motor line of business. On health, I think clearly the runway for growth is significant, and that's one of our preferred segments for ICICI Lombard, whether it is a retail indemnity or whether it is a retail benefit segment. I think we are looking at very positive insofar as growth opportunities in the health segment is concerned. And finally, I would say even on SME, that's again an area of focus. We see a lot of opportunity in terms of growth when it comes to the SME portfolio as well.
Right. Gopal, lastly, what's the update on Bharti AXA, and also at an industry level, do you see consolidation going forward? Will inorganic growth be part of the overall growth strategy in that sense?
Oh, again, that's a great question because if you look at the earlier point that I made, that the industry is operating at a combined ratio in Q3, I'm not necessarily referring to Q1 and Q2 because those were periods where the loss incidences were significantly lower for the industry as a whole. So Q3 is more representative, and Q4, when the numbers are out, I think we will be able to see the clear picture. But clearly the industry is still operating, as I said, on a combined ratio of which is within that range of 118-119%. Given the strain that these players are exhibiting and the fact that the possibility of capital infusion becomes incrementally limited given the environment that all of us are operating in, there will definitely be room for consolidation. And it is in that context where you have already seen some transactions that have happened in the market. And even from an ICICI Lombard standpoint, last year we did announce the demerger of Bharti AXA into ICICI Lombard. That particular transaction is of course subject to necessary approvals. And at this point of time, we are awaiting clearances from the NCLT. And once the NCLT clears, we will go back to IRDAI for the scheme to be becoming effective. But the point is right. I think the ability of players to continue to be aggressive and continue to lose, let's say, money on the underwriting side could become limited. And therefore, that by itself will open up doors or opportunity insofar as consolidation is concerned. But at this point of time, from an ICICI Lombard standpoint, we would want to see this particular transaction that we announced last year to get through. And then obviously we will see if there is any other transactions that come in the process.
Gopal, great to have you on the show. Thank you for taking the time out and speaking with us today.